Hello everyone, welcome back to Chill Deal Trades, the most accurate stock market channel on YouTube. Today we are covering Alibaba, because they just had earnings and the reaction was not very great. This is a company that we love on the channel long term, but we've been constantly talking about the potential short-term issues that could be going on. So we're going to dive into the earnings, kind of break it down, and then go into the technicals to figure out where the stock could be headed next. If you're here and you haven't subbed, please hit the sub button. We're almost to 600. It'd be amazing that in the next month we can get to 700. So please help the channel get there. Okay, so first thing we want to call out is that Alibaba missed 10% on EPS, 2% on revenue. So the revenue was the part we really had a big question mark on. We know when it came to EPS that two things: costs are rising. It's kind of just happening everywhere in the world, so it's not going to pass up Alibaba. And the second thing is they paid some fines. And so those two things combined, kind of we knew EPS was going to miss, but we were hoping revenue would beat. It didn't, and people did not like that reaction. So we'll break into why. A couple quick call outs. 20 PE ratio. I would say it's about 16 to 20. Right now it's really low factoring growth. But when we break down the numbers, the growth is maybe not as good as we would hope. But this company is relatively cheap. I keep saying this in my past videos, guys. China's in a bear market. It's just what it is. Bear markets last longer than you think. I know a lot of people watching these videos have not experienced a true bear market. Bear markets can last a really long time, especially when you have real estate crash happening in China, financial crash in some sense with the CCP, all this regulation. Bear markets can last years. And what I keep saying is I really do think PE ratio is going to probably fall somewhere to the 10 to 15 range. And that's kind of been my synopsis so far. And that's why a couple videos ago I only bought one share. I told you guys I'm very on the fence with buying shares right now. I bought at 148, I think. I was happy buying one share there. If it goes lower, I'll buy more. But that's kind of what I've been telling you guys. So that's my advice, but I'm not your financial advisor. Okay, so when we look at adjusted EPS, 11.2 compared to 11.1, so slightly missed there. And then revenue, 200 billion, but the goal was 205. So not really that terrible, like we said, 2%, 9% miss. It's not really that bad. So active consumers in China beat. That's a really big positive, because looking forward, you know, if we're having active consumers and people still willing to buy in what's happening in China, that's going to help keep their revenue outpacing, or I would say keep their revenue growing at a substantial amount for the valuation to matter. When we dive into, let's go here first. So when we dive into things, the first thing we see is that total revenue up 29% year over year, China commerce up 30%. Put a little asterisk here, including Sun Art, or excluding Sun Art, it's only 16%. And so I said this in my last video, people didn't like it. I told you when you look, historically speaking, Alibaba was on pace to start getting into under 20% growth. We see it slightly, you know, we see it higher because of Sun Art, but their core business was on pace to go. People hated me in the comments for saying that, but I told you guys they're on pace that direction with everything happening. Still, holistically, 30% growth, still good to see. China commerce, 34%, cloud computing, 33%. So cloud computing, it's a small part of the business, but that's where a lot of their growth is coming. And the biggest red flag for me here is that when we really look into the cloud computing, it was up 60% last quarter or last year. And this year it's only up 33%. That's the biggest red flag. I would say this part of their business really does need to see a larger increase of growth. That's what I would really like to see here, because these are the part of the business that are a little bit smaller. They're going to help. Obviously, just like we're seeing with Amazon, at some point your sales start to slow down, typically have smaller margins, but you need things like cloud computing and other more higher margin parts of the business to really see growth. When we go to their digital media entertaining, you know, not much growth here, but Don't really expect that. When we go to their commerce, 31%, like we mentioned. Still decent growth there, so that's good to see. The next thing I want to go to is, where's it at? Cost trends. So there's a couple really good call outs here. The first one is sales and marketing. So I work in marketing, so I understand this space. But here's where the con is. So we're seeing year-over-year increases. So if our company is big, we really don't want to see a 4% increase in marketing and sales expenses. And we look year-over-year, or to 6 months, it's still in that same trend. And so when a business is this big, what you'd really like to see is start seeing those marketing expenses get flat. And so when you see them increase, what that's telling us is it's becoming harder to acquire a customer in China right now. We're still seeing active users or active consumers really healthy, but that decision making is being harder. That could be a number of reasons: more competition. The CCP is wiping out of some of Alibaba's, I would say, competitive advantages through their monopolization of the market. And so pulling those back, maybe more competition, it's being more competitive, which means your expenses go up. So those are things we really want to keep an eye on, is how these expenses increase over time. I would say that's one of the biggest things. Overall, we're seeing their costs increase. Some of this product development, that's basically flat but increasing. So we want to see these parts increase, because that means that Alibaba is still pushing money into research and development, which is going to help grow top line revenue long term. When a company gets this big, they have to keep either buying companies or putting more money into R&D so that they can grow long term as a company. So those are the main things I want to call out here. You can look this up. I'll actually put it in the comments if you want to read through this presentation yourself. But overall, some pros and cons. I want to look at institutions, because I love this. So last quarter, we know we got really big sell. We're probably not going to see this much selling again, which is a good thing. The con is we're still seeing more selling than buying. Tell you guys, we've had more selling than buying since mid-2020, and that's why I haven't been buying. And guess what the stock has been doing? Look what the big dudes are doing. The big dudes and gals, I guess, in this case. And they're still selling. It's still kind of lately on this big dip, there's been some selling, there's been some buying. I think there's a couple big buys here. So it's still kind of in between. People don't know what to do yet. We're not seeing anything tell us the truth about what's next for Alibaba. And I think that kind of goes on the notion what I'm telling you. Bear markets can last a while. Don't expect this to flip overnight. That's not how it's going to work with a stock like this. Okay, now we go to the charts. So I kind of want to, this is weekly chart. I just want to focus on big picture here. I think it's important, as this is a long-term investment for us on this channel. We want to look at long-term trends. And so the first thing I want to call out, you know what I'm going to talk about if you've been here, the 20 EMA, 20 SMA. Or not simple moving averages, but 20 moving averages. Look, guys, on the move higher, we failed to break above on the weekly. Fail. Tell you guys, long-term investments, especially when something's in a bull market, I've been using the weekly chart much more, because I'm looking for the long-term switch, the long-term trend reversal. I'm looking for something long-term that tells me this is a good time to buy. So we're still not breaking above the 20, which is a con for the stock. We did have a big move down here, so we're probably going to need to see a little bit of relief. It might push down to this next support around 130, but we're going to need a little bit of relief at some point for it to come back up. So if that's the case, we have support. Let me zoom out, because support is so long time ago. So we have support right now around this 140 to 138. And this is a zone that I really want to pay attention to, because long term this is really important. So 138 is right here if we go back in time, and 130 is right here. So if we circle this area, this is the lowest point in price, the lowest dip in price from 2018 or 2018. So if we break below that, then we could see a bit of more acceleration to the downside. And when we look big picture, that kind of aligns with what we're seeing. So when we look at the Elliott wave, so we have 1, 2, 3, 4, we're most likely in the fifth wave. If we break below this 3, we're most likely in the fifth wave. And what we mentioned, I think a couple videos ago, is we weren't sure if this was the third or the fifth. So it came down here, we said maybe it is the fifth because we started seeing this accelerate upwards, but we needed to break above that 20 EMA, and that's not what we saw. And so now that we see this coming back down, this is potentially telling us that we're headed for a fifth wave down. If this is a fifth wave, then we want to look at where our support lines are for potential price in the future. So like I mentioned, 130, very, very important support. If we can't hold that 130, then we're kind of in this, I would say 110 or 100 to 130 range as a potential pullback farther. It really depends if more FUD happens, if we get more price analyst decreases, if we see more of the people who've jumped in to buy on these dips start selling. You know, we've had one sell, I think Munger's still holding, another guy sold out of his position. And so these are things we want to pay attention to see how much fear kind of gets in this and how far down it can push it. Realistically, I think 100, you never know what's going to happen. I think that's probably pretty hard to hit, but we could see this go to 130 or go to this 110 to 120 range. And we kind of see we have a descending triangle here. So we have this down this way, and we have a couple headed down this way. It's these green lines. And we kind of see, I don't think we'll get way down this low, but we do see kind of this range probably in here being pretty significant support if we can move that low. On the weekly chart, something I'm also paying attention to, not that we can time where this is headed, but I'm looking at the RSI. So if we can get a divergence here, that could be a really big win for this stock. So 138 when we hit last time, we got oversold on the weekly. This stock has not oversold very much in the history of Alibaba. Twice. 2 times it's oversold on the weekly. We hit it, and now we're coming back down. And so let me zoom in. If what we can see is Alibaba come to say 130, 120, but RSI doesn't break below this past, then we could start seeing some divergence in the stock, divergence when RSI has an uptrend, but the price has a downtrend, and that could potentially be calling we're getting towards a bottom range. So that's something I'll be paying attention to see if that starts forming on the weekly time frame. And if that happens and we start breaking lower, this is where I'm going to consider buying additional shares. The biggest risk with Alibaba long term is just if it's going to get delisted or not. There's all this drama back and forth about US saying we need real financial statements, but what's his name, Z? Am I saying his name right? The leader of China, he's saying we're not giving you that. If you ask for that, that's going against my orders. I don't like that. So we could see it delisted. That's a big who knows, but that's always in the back of our heads. If we do see some up in the short term, let's go to the daily. So in the short term, we have 20 EMA around 161, but we do have pretty big resistance at 153. So if this was an overreaction, I want the stock to come back above 153, come up and be able to hold it. If we can hold that and then break out of these downturns here, then the stock has hit a bottom and we potentially have a double bottom here. But if we have come up and we kind of come here and rejected, then we could have a head and shoulders, and then we're definitely headed lower again. So those are just a few things to look at for both the long term on the weekly chart and maybe some short term price action. I appreciate you guys stopping by. Monday, Wednesday, Friday videos. So I'll see you again next week.